Hey guys, hope everything is going well. I want to do a quick video on the markets, and it's wacky as usual. I'm looking at the Japanese yen right now. Japanese yen, the risk on, risk off trade, has been very peculiar in my opinion. Very odd. And the reason is that you're seeing risk off right now with the Japanese yen going up, but the markets have stayed constant. And then on the other hand, the Japanese yen is correlated to the price of gold for the past 4 or 5 years. Whenever you see the Japanese yen appreciate, gold prices tend to go up more times than not. And then if you see the Japanese yen sell off, gold prices go down. And right now, you're seeing the Japanese yen go up, and up. And even today, Japanese yen still closed higher. It didn't sell off. I mean, yes, it was at 100, but then it went to like 101. But still, it gained ground from yesterday. In addition to that, you have to look at the fact that the markets went up. Very odd behavior as well. Japanese yen went up, markets went up. You usually see an inverse relationship between that. Since December, though, that correlation has died down, though. Just want to disclose that. Now, if you want to look at the Japanese yen and then the price of gold, Japanese yen was trading at around 124 in the winter of last year, and now it's at 101. While the gold price in December was 145, and now it's 1370-ish. I haven't checked after hours. So if you see the Japanese yen continue to appreciate without the economy collapsing, that is the if. Without the economy collapsing, Japanese yen going up and up and up, gold prices, in my opinion, will go higher. But now from a trading perspective, I feel that gold is overbought at this moment. And yes, I do have long positions of gold and silver ETFs, but then I also have short positions as well. So it's long term, I still am in the belief that gold prices will go higher, but right now I do have some short positions as well and some hedges, because my portfolio at one time was very large in gold and silver. Now, what would make gold collapse to below 1,000? I know there are pundits saying that it's going to go below 1,000. It's going to go to 700. It's going to go to 800. If Janet Yellen were to come out and say, hey, you know what? We're going to have negative interest rates. The minute that they do that, I feel that gold prices would collapse and we'd have a stock market, not crash, but it would go down 4,000 or 5,000 points on the Dow, in my opinion. Why that would happen? Because you look at negative rates, they're essentially a tax, right? You're taxing deposits. Instead of people getting yields, you get money taken out of the system. That's what's going on. Japan's doing that, and you could see the initial reaction to Japan is that their stock market, their Nikkei has been going down. You've seen bond prices in Japan go up. I feel that will blow up in their faces, but in the interim, that's what's occurring. Now, if Janet Yellen were to get scared because of what you're seeing in Europe right now, I'm not talking Brexit, right? But I'm talking about what you see in the banking system there. You see Deutsche Bank right now, a lot of rumors about Deutsche Bank. I do have a position in Deutsche Bank, just as a disclosure. A lot of talk about Credit Suisse and some other banks in the European zone. Those banks are not doing so hot. And then in addition to that, you see low yields, right? Low yields are not good for the banking system right now and in general. And the 10-year yield, ironically, is trading at 1.40, right? Historic lows right around that level. And I just read something about Jeff Gundlach. He's saying that, hey, this may not be the best time to accumulate bonds at these levels, even though they may go lower to like a one handle. may not be the best price entry. And just as a disclosure, I have a TBT position as well that I just entered into. So what I think happening, like from a very quick trading perspective, if you see rates go a little higher, may make markets go a little higher, and then get a gut feeling that the Japanese yen will sell off, which could help markets short term. But overall, nothing has changed from a fundamental perspective. You see the ECB engaging in insane deflationary tactics, right? They're going negative. Japan's going negative. You see low yields. That's not great for the banking system. Like banks like Deutsche Bank, Credit Suisse, won't help them in my opinion. You've got those derivatives. You don't know what the hell's in them, who owns them, this and that, potential systemic risk. So could we see the market go higher? A little bit, but ultimately, in my opinion, it's going to be going like a pendulum, going up, going down, going up, going down, just like last year. And then something out of Europe, in my opinion, is just going to make this market go down. Doesn't necessarily have to be a 2008, 2009 moment, but something doesn't seem right. The way that the Japanese yen has been trading, the way that the bonds have been trading, just seems very, very eccentric, but who knows? Anyways, guys, leave your thoughts below, and I'll talk to you guys later. And just as a disclosure, I do have a short Japanese yen position as well, pretty much to hedge some of my short positions. So, all right, guys, talk to you later. Bye.